And all about stocks this week, a volatile week on the Wall Street. The Sensex hits 21,000 and ends the week a percent lower. We focus on L&T, which rallied 19% over the last month. We'll tell you if the capital goods sector is making a comeback. And our guest this week, Sharmila Joshi, gives you 2 investment ideas for the long term. Welcome to All About Stocks. This is a show specifically meant for long-term retail investors who invest their money in the stock market. We've had a very interesting week, the Sensex hitting 21,000. Over the next half hour, we'll find out if you can expect new all-time highs over Diwali and what your investment strategy should be. Remember, our email ID is at the bottom of your screen. Send in any question you might have about your stocks. Let me bring in Ajay right now, who has a report on how the markets played out this week. Ajay.
Well, Faye, it was an interesting week because the markets, the Nifty and the Sensex scaled fresh 2013 highs. In fact, the Sensex breached 21,000 momentarily. And of course, at higher levels, a lot of fresh positions were taken off. Profit taking came, fresh shorts were initiated. But analysts believe that looking at the way earnings have not really disappointed so far, in fact, it has been a pleasant surprise on the earnings. The global markets continue to remain supportive. FIIs continue to remain buyers. In fact, around 4,000 crore worth of buying has happened as far as FII side are concerned this week alone. Markets could be negotiating higher levels. Rupee was relatively weak this time round, around less than a 0.5% is the kind of weakness set in. But despite weak rupee, FII flows continue to remain robust into our country. Some profit taking at higher levels may have happened, but if the flows continue, the liquidity situation will take markets higher. That's what most of the analysts are telling us. RBI meet is also scheduled next week, where expectations are running high that a repo rate hike could be coming and MSF could be scaled back. But that, most analysts say, is actually priced in. So markets right now look in good shape.
All right, Ajay, thank you for that update. Joining us today, Sharmila Joshi, Head of Equities at Peerless Securities. Sharmila, thank you so much for coming in. It's been an interesting week. It's a difficult market to actually predict at this point, but we've seen so many reports so far predicting all-time highs before Diwali and perhaps a further rally over the Christmas global rally that we see every year. Let's talk about Diwali first. Are you also expecting all-time highs? Is that likely?
I'd be very surprised, honestly, if that didn't happen, simply because the FI flows have been relentless. I think in the last week alone, we've seen 4,000 crores net buying coming in. And this against a backdrop where really the domestic institutions are not doing much because really speaking, their equity portfolios are not doing that, they've not really seen too much of inflows there, and retail activity is quite negligible at this point in time. So it's really the flows which is driving the markets, and we've come to this 21,000 level also very quickly. So I'll be very surprised, in fact, if we didn't make an all-time high. Of course, that's not saying much, because let's remember it's coming after 5 years, and earnings have gone up in the meantime. So the multiple is the PE multiple that the market will get, even at if you reach that 6,300 number on the Nifty, will not be a bull market multiple. So from that aspect, it's great to see. It will be great to see that number back on screen. But if you look at the kind of participation that we've had, as well as the discounting that the market is getting, it's not really a bull market.
Okay, and if you look at the corporate numbers we've seen so far in this season, what are you impressed with and what has disappointed you so far?
Overall, I think they've been fairly good, much better than I expected, especially on the banking side, because I had thought that maybe in the private banking you would start seeing the pain of NPA sort of coming in, because last quarter we did get an indication of that. But this quarter has been quite good, I think, as far as so far whatever we've seen from private banks, whether it's ICICI Bank, whether it's Kotak Bank. Fairly good numbers. IT has, of course, it was expected to put in a good show, and it's done just that. I think the kind of numbers that we've seen from TCS, etc., have been really excellent.
Now, the mid caps and the small caps in our market have been, have been down in the dumps for so long. Are you expecting, if we do see some sort of rally over Diwali, are you expecting maybe some of the mid caps to recover?
Yes, and I think we've already seen some of that happen. In the last week, we did see mid caps sort of join the fray, and some of it also has been on the back of good numbers. Like for instance, Sensex, we did see the stock rally very sharply when they reported good numbers. We've seen stocks like Escorts, for instance, do very well after they reported a great set of numbers. So there have been stocks like that. Rallis, I think, had fairly decent numbers. So there have been these sort of stocks in the mid cap space as well, where the numbers have been fairly decent. And yes, I think such stocks will definitely join the rally.
Is it time now to then add a couple of mid caps to our portfolios?
My portfolio does have some mid caps, because I don't think that your portfolio should be without mid caps. My only suggestion is to not get carried away by very like absolutely trading tips kind of a thing, and get into stocks which are very leveraged. So it should be a mixed balance, and possibly the outperformance can come from mid caps, but it of course is all a function of what price you actually buy a stock, because I think even a large cap stock can give you a great return depending on when you bought it.
For the rest of the year, we have a couple of months to go. What's your advice? How would you approach this market?
I would say that you should add on dips, don't get carried away. Like if this rally continues further, don't get in at very high prices, because I can't say absolutely with absolute certainty that you're not going to see a correction from these levels, because this has been on the back of great inflows from FIs, and maybe it can continue into December. But what happens when you actually see that QE tapering start? Because really speaking, macro numbers have not been that great. We still have an RBI meet. Maybe you are hearing that there could be a possible 25 bips rate hike. Has that been factored in? So that way there are the elections. So there are a lot of uncertainties to play out. So from that aspect, I think it's better to practice caution and try and buy on dips.
All right, since you talked about Syntex, in fact, we have a question from Somu Sundaram, who's written in. He has 400 shares of Syntex bought at 75 rupees. He wants to know if you should hold on to it. Now, Syntex on your screen right now, you'll see end of the week at about 33 rupees. What would you like him to do with that stock? We saw the numbers look very optimistic and very positive, but is that enough? Because he's losing a lot of money.
Yeah, I think the problem here is the price that he's bought it. I think the numbers are good, and if it's, I think, the second good quarter that they've had. So the kind of EPS growth also that they've shown is very heartening. And we did see the stock rally from 26 to 36. So that's the other worrying thing, because it has to consolidate somewhere at this level. Point, right. Because people who bought in at 26 are going to sell at that level and take some money off the table. So perhaps a better thing for him to do would be that if it falls again, like if you see a correction, maybe he should try and average his price out, because I think 75 looks really difficult in a hurry. So perhaps he should try and average the stock at lower levels. But I think now, in terms of fundamentals, in terms of numbers, things are beginning to look better for Syntex. So from that point of view, he can hold on to it. I think you can see levels of closer to 42, 43 on the stock.
Krishna has written in, he's sent in these stocks. Now, he's a long-term holder of these stocks. He's a long-term investor. He wants to know what he should do with this list, and if it's the ideal list, of course, to go into what we might see as a bit of a run-up in the market over the next couple of months. Now, he has ICICI Bank on the top of his list, which he bought at 900 rupees. The stock ended the week at 1,022. Its numbers were impressive on ICICI Bank. Is this a bank that you would recommend he holds on to?
Yes, I think that private banking is a good sector to be in, and within that ICICI Bank would be on my list. And we just saw the numbers this afternoon, and the numbers were good. You have seen NIMs improve. Asset quality also seems fairly steady. So all things put together, I think it's a good stock. Maybe you can try and buy it on dips, because we have seen private banks also go through a period of pain. If you get that kind of a scenario again, maybe you can try and average it out lower. But if you're a long-term investor, I would say just stay put.
I'm going to take the next two stocks together. He has Ranbaxy bought at 350, and he also has Lupin, which he bought at 526. That's making a handsome profit for him. He has 100 shares there. Between the two, should he hold on to both of them?
I prefer Lupin. Because I think a lot of these pharma names are seeing some kind of regulatory concerns, and he's bought Ranbaxy at a fairly decent price, but I think it might be a good idea to just completely switch to Lupin.
All right, last stock on his list, he has Apollo Tyres, which he bought at 85 rupees. Now, Apollo ended the week at about 69. What's your call on Apollo Tyres? Does it make sense to hold on?
It's a decent company. I think the only problem has been, that deal and then the uncertainty whether they will go through with it or not. So, I mean, just let's wait for the numbers. But I think between the three tyre companies, Apollo, JK Tyre and CEAT, I would prefer see it. So, I mean, he can take a look and then decide.
All right, so prefer Seat over Apollo Tyres. Time for a quick break, but stay with us. When we come back, Sharmila will give you 2 stocks that she's picked out that you can buy right now for returns over the long term. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Thank you so much for staying with us. Sharmila Joshi is still with us in the studio, helping us figure out a long-term strategy for our stocks. Well, Sharmila, thank you so much for coming in. And you've also picked out 2 stocks for us to buy at these values on Monday morning. What are the 2 stocks that you have for us?
I don't know about Monday morning because I think next week could be a little volatile given the fact that it is expiry week. Yeah. You can play it by the year and try and buy these stocks on dips. But I think going by the numbers, I like INFOSYS at this price simply because the valuation gap between INFOSYS and TCS has opened up quite a bit, and there is a greater chance that INFOSYS will play a bit of a catch up in the coming quarters. So if you get it at lower levels, if you get it closer to 3,000, nothing like it, but I think that you can easily expect a price of 3,600 on INFOSYS. In that range. So that becomes a good stock for me at current prices, because we have seen a run up in all the IT stocks. So it's a little dicey from that point of view. The second stock is Escorts. Here again, I think we've seen a very good set of numbers, and if you go by the sales numbers in the last month, they did a 33% kind of a sales number. But of course, that is not going to continue. But overall, it kind of shows that they are on a good strong wicket now, and given the fact that monsoons have been good, you can expect the next quarter also to be a strong quarter for Escorts. So I would expect a price closer to about 125, 130. But here also, we've seen the stock run up from about 70 odd levels to the current 93. So try and buy it on dips, but this is a stock that you can buy.
All right, 2 stocks there from Sharmila. Those are the recommendations she's giving us, INFOSYS and Escorts. I want to quickly squeeze in a couple of more questions. Well, KR has written in, he has 300 shares of L&T bought at 795 rupees. He wants to know if he should hold on to that stock. Now, we saw a 19% run up in L&T over the last month. I'm going to bring in Ajay to give us an update on what's going on with L&T, and then we'll talk to Sharmila about what we should do with that stock. Ajay.
Well, Faye, in fact, Larsen is one of the most interesting large cap, stock movers in the past couple of sessions. It has gained not only over 8% this week, but if you take into account the entire month, around 20% kind of gain coming in. So a lot of leadership is coming to the index and to the capital goods space from Larsen's movement ever since the results have been announced. Nothing great in the numbers, but management guided at much better prospects in the coming quarters, and the entire sector thought that when the industry leader is guiding at improved times going forward, it sparked a rally in some of the other capital goods stocks like Punj Lloyd, some of the mid cap ones like Crompton, Havells, AIA Engineering. All of them rallied ever since Larsen's management has guided at a very confident prospects going forward. So this is one space one needs to keep an eye on.
All right, Ajay, thank you for that update. Sharmila, interestingly, I have 2 questions for you. One, what's going on with L&T, and do you expect this run up to continue? And is it in any way signaling a turnaround for capital goods at this point?
I think turnaround is too early to say, but the fact of the matter is that they did fairly well this quarter, better than what market was expecting. And order book is fairly stable for L&T. So I think that's the heartening thing, because after all they're a market leader, and if you saw any kind of sense that the order book was going to be a problem for L&T, then that would have really signaled bad things for the sector, which in any case is in the down. So I would really hold on to L&T, and I would have a target closer to about 1,050, 1,100 on it.
Roop Kishore has written in, he has 65 shares of Jet Airways, which he bought at 570. He wants to know if he should hold on to that stock. Its stock ended the week at 346. he's losing a fair amount of money, in spite of the fact that we've seen activity in the airline industry. Is that enough for him to ever recover the money that he's lost so far?
See, there are two issues with Jet. I mean, pro and con sort of a thing. The con obviously has been the fact that their numbers were so bad. And I think this last week's fall has been because you saw that huge loss being reported. And that, when you view against an environment where we saw the unlisted player doing, so well, it's really sad that that the listed player, reported the kind of such a bad loss. But the good thing is that, now you'll have the Etihad deal playing out.
Right.
I think possibly he must have bought it around that time, when you were seeing that stock go to that 600 level. So, let's wait and see, because once they come in, they could, maybe one of the reasons of reporting this loss was also to, to put it all out there, and then so that Etihad can start and, build the book from there. That could also be a strategy. So, I think if he's not in a hurry, he should just wait and see how that situation plays out.
Well, also tell me about SpiceJet at this point. We heard some talk about the fact that Qatar Airways might be considering a stake sale, which the company has not confirmed. But what's your call on SpiceJet as a stock?
I think they're doing slightly better than Jet. I think their numbers won't be as bad. But there have been other issues with SpiceJet. So really speaking, there's not much to choose between the two listed players. And as I said, for Jet, the big positive was that the Etihad deal has gone through for them. So that's a bigger positive waiting to play out for Jet. And until we hear something more concrete from the SpiceJet management, I think I would prefer to be in Jet.
All right. Let's also take one quick viewer query. Jaidev has written in. I'm going to take this like a rapid fire so we can save some time. He has these stocks in his portfolio. He wants to know which of these he should hold on to. 50 shares of ITC. The results came in below street estimates. Were you disappointed with ITC as well?
Yes, I think the results were a mild disappointment, but the stock has already corrected. So I think from that point of view, I'm not expecting too much of a price correction, and I think that he can stay put in ITC.
Sri Renuka Sugars at 32 rupees. What's your call on this stock?
I think this is not a price to sell. So only from that perspective, I think you can stay put in Sri Renuka.
Well, he also has 50 shares of Tata Motors, which he bought at 224 rupees. What's your recommendation on this stock?
I think around the level that he's bought it, that would always be a kind of a good buying price in Tata Motors for me. So again, I think, unless he's in a hurry to sell, he should just stay put with Tata Motors.
He also has Cipla bought at 389 rupees. You talked about the fact that you prefer Lupin, but between Lupin and Cipla, which one would you prefer?
Not prefer, but I think Cipla is also a fairly decent play within the pharma sector, and their model is quite different. Lupin has a more of a focus on domestic, and they're getting into some